We have the Nifty Financial Services Index that will play out the weekly expiry. So banks, particularly HDFC Bank and the Financial Services Index, will keep an eye out on both those two. How do you trade from here on, though? Mitesh joins us to help us out with the trade on the index. Well, Mitesh, you're not really convinced with regard to this up move, I think so. At what level would you think that the market is turning? For the time being, I think you'll be using the opportunity to short. Is that correct?
No.
All right.
Okay,
so what is
the idea was, the idea was that 22,200 was the level to watch on the upside.
Okay.
And, during the day we were hovering around that, but not showing any signs of weakness. So in fact, we didn't short, but, when the market did manage to cross 22,200, 210 on the spot, we had some minor long, which is not very aggressively long. But I think this is a market which is, very clearly at least taken care of the negative sentiments by staying above 22,200. So for me, now I think, the turning point is 22,100. So you have a 100-point stop if you want to go long on the Nifty. The targets are closer to about 22,500. So there's still about 250 odd points left on the upside. So I think, as I said, we're not looking at a big upside. We're not looking at a very aggressive move on the upside. But I think this could drift up given the fact that the negative sentiments are kind of taken care of and the hourly and the 2-hourly charts have managed to look up. So in that sense, I think, don't be short in case, because early in the day and for the last couple of days, my view was that we'll try and short around 22,200, which we didn't do because there was no weakness when the market was around those levels. So if anybody has it, I think exit and maybe, around 22,200, 220 zones, try to take a long with the 100-point kind of a stock.
Okay, Mitesh, we'll leave it there for now. More with you in just a bit from now. PVR Inox reported numbers early on for the fourth quarter and for the full year number as well. The numbers seem much better, of course, as compared to the previous year. Revenues have gone up about 11% year on year to about 1,290 crores. That's, of course, for the quarter. We are now joined by Mr. Ajay Bijli, Managing Director of the company. We'll also have the CFO join us in just a bit. Ajay, good afternoon. Good to have you back with us here on CNBC-TV18. Prashant this side. We spoke to you just a few days back, and at that point, of course, you could not talk about the quarterly results or anything financial. So let's start there. So you've, you posted you're in the black in 24. Will this continue? I mean, would you? How is FY25 looking? If you can guide the market and us as well for what trends we should expect.
Well, what I'm happy about is that 2 years it's been since COVID. Things are only improving. We had 140 million people who came to us last year. And this year we got 150 million people. So that's good. Occupancies have gone up slightly, but our revenues are up by 17%. I'm talking about the full year. And also our EBITDA, we've still come out with 809 crores of EBITDA. So things are only going better. I think the three fraternities which define our business. One is the film fraternity, then the real estate developers. We're joined at the hip with all shopping centers and malls. And the third is really the consumer. They're all, sort of, getting their act together after being shut for so long. And so slowly it's all inching towards positivity. So, I mean, the outlook every year, these are movies which are on paper. But currently, at least, I'm excited about some of the South films which are coming. Pushpa 2 is coming, Kalki is coming, Indian 2 is coming. Some big films are coming. In India, Hindi films, the genre which is doing exceedingly well just now is, with the youngsters at least, is these little jumpy movies and little scary movies. Hopefully, the numbers won't be scary. So, Stree 2 is coming, Bhool Bhulaiya 2 is coming. Amir Khan is coming after a long time with a movie in December. A big movie of Amir and Sunny Deol coming together is coming called Lahore 47. Then you got Baby John, which is a South Indian, another Atlee movie with Varun Dhawan. So at least the lineup, which is the film part of the whole thing, is looking promising. And as I said, consumer has also now given its verdict then that they want to go out and entertain themselves, which is the reason why we've got 151 million people who came to our cinemas last year.
Gentlemen, afternoon. This is Reema here. Nitin, your average ticket price has declined in Q4. So what led to that? And you've typically said in the past that the company takes an annual price hike of 4 to 6%. Is that on the cards? And if yes, when? And particularly about footfalls and occupancy in the near term, in the quarter that we are in. Given IPL is going on, Should we expect a drop in footfall occupancy? What has it been so far in the quarter that we're in?
Sure. Our ticket price is directly a function of what films we are getting during the course of the quarter. In Q4, you would have noticed our footfalls were slightly lower than how the Q2 and Q3 played out. So because they were not very big films, our average ticket price growth was, negative during the quarter. We still maintain our guidance to, get to inflation-led growth 3 to 4%. But, during the course of last financial year, we had ticket price growth of almost 10% because of the merger synergies that the way they have played out. I think this year, ticket price growth is going to be slightly lower. We are completely focused on, getting more people to cinemas, including, launching initiatives like Passport, which is, a subscription service where at 349 rupees a month, you can watch 4 films during the weekdays. So we'll be launching more of that. And, we are going to look at a slower ticket price growth this year, but the focus will be to drive more admissions. The second
And what about
question.
the-
So, Nitin,
Yeah, go ahead on occupancy and footfalls, given that IPL season is on.
Yeah, I think quarter one is going to be a slower quarter because a lot of film releases have got pushed out, not just because of IPL, but because of the elections, because you have to close down in most of the markets during the course of elections. So I think April and May are quite slow months. We expect, film releases to pick up starting mid-June onwards. And hopefully Q2 and Q3 will be great quarters where all the big films are lined up for release. But Q1 will be a slow quarter, given what we've seen in the first 45 days of this quarter.
Nitin, hi, afternoon. So give us a slightly longer horizon view, because this is also the first interview as we're talking to you in FY25. Now, a lot of things are happening. I mean, there's a premiumization, and we remember our conversation with Ajay just a few days ago, where your premium screens are 15%. Gradually, I think the plan is to take them to 20%. That's one aspect. Then the way you're sort of moving with the average ticket price, coupled with the way the trends you're observing on the F&B side. So all things put together, you closed FY24, I think, at an EBITDA margin of around 13%. Now
That's
that the
right.
business is back, sustained, run rate for EBITDA margins, what should shareholders expect? I'm talking about yearly EBITDA margins.
Yeah, see, ultimately, as the business matures and stabilizes, we want to get back to 20% kind of EBITDA margins for sure. A part of it is also a function of how the content lineup flows out, during the course of the year. But if you look at our investor presentation, we have done a lot of work on the cost side. And, we are waiting for, a box office to start performing slightly better, because our advertising revenue, uptake is going to play out in the next 12-15 months as the box office picks up. So we expect to go back to 20% EBITDA margins in a midterm. It's very difficult to say whether it will happen this year, but we're definitely in the 12 to 24 month horizon. That's the aim, that we want to get back to pre-COVID level of EBITDA margins.
4 months is the target for that 20% margin. Is that the right way to look at it?
That's the right way to look at it. Yeah.
Got it.
And Nitin, that in your investor presentation, there is this fascinating sort of table, FY20 to FY24, how have costs moved, right?
Yeah.
And you've kind of, and you looked at for each of the items, rent and manpower costs and utilities, how you've, to increase margins from here, I'm assuming this is that you've squeezed out everything you can, right? Or help could come from the cost front as well. That's still possible.
I think the big cost now we are focusing on is the occupancy cost, which is the rent and CAM that we pay in shopping centers. Whatever was directly within company's control, you would notice that we've done a lot to squeeze out, cost savings during the last 3 to 4 years. But we are also working equally hard to drive up revenues, because getting more people to cinemas, through various pricing initiatives, as well as a lot of promotional initiatives, remains the key target of the business.
So you'll also have plans to liquidate your real estate assets, and you're sitting on prime real estate, whether it's in Mumbai, Pune, Vadodara, and I think it's valued at about 300 to 400 crore. So first correct that, and if that's the right number, the valuation of your real estate, and what's your debt deleveraging plan? How much will you pare down in FY25? How much in FY26?
Yeah, so I think the plan is, if you look at even in a volatile year that we had almost 100 crores of free cash flow that we generated from the business. And all of that has gone down to pay down debt. During the next 12 months, whatever will be the free cash flow that will get generated out of the business will be used after CapEx to fully prepay the debt. And, we're in the process of figuring out the monetization of real estate assets. We are in that phase where we're evaluating the sale. And all the money realized from monetization of that assets will be used to pay down debt. Our focus will be to reduce our leverage down by at least 50% over the next 12 to 15 months period.
Okay. All right. So looking at reducing leverage. Ajay, finally, I mean, a little short on time, but we want to sort of end with a couple of strategy notes from you for the year ahead. One, Prashant was just pointing out, I think, from your presentation that you've tied up with the Devyani International for, certain F&B initiatives that you're looking at. So just explain that rationale. And also, I believe that a large chunk of the new screen additions are going to be happening in the south. So why the stress in the southern markets, and just, larger strategy to grow the business as this year rolls out?
Which is a couple of things. One is Devyani, definitely, because all our F&B sales just now are post-ticketed, and we believe F&B is a very important driver for our business. And again, not putting all your eggs in one basket. Some pre-ticketed F&B income is something that we've been very focused on. And we had either the choice to do it ourselves or tie up with somebody like Devyani. We already have a relationship with them because of our Pepsi association for a very long time, and Costa Coffee relationship with them as well. And lots of malls have got these, so to speak, unorganized food courts, which are not branded. And we believe that if we tie up with Devyani already has a focus on food courts, but a lot of shopping centers offer this opportunity, and we can get more share of the consumer's wallet. 150 million people, as I said, come to our cinemas anyway. And we believe that's a good pivot for the company to do, rather than just focusing on F&B, which is post-ticketed. That's one. Second, South market always has fascinated us more because the content supply and demand is much more robust over there. You have Malayalam, Tamil, Telugu, Kannada and English, Hindi films which get consumed. And plus the movie-going index of southern customers is much more than north, east, west and south. But the fourth strategic pivot that we are taking is that our capital intensity is going to be lesser this year. We are going to be, we have a lot of deals in place where the developer is going to be contributing into an asset-light model for us. A lot of retail companies have moved into that, and we believe the brand is established now to move into that zone, which hotel companies do. And as I said, certain retail companies recently have started doing that, either a FOCO model, which is franchise-owned company operated, or pure, a very asset-light model, where bulk of the capex is done by the developer. So we are being very, very choosy about how we grow, because we've already got a base of 1,744 screens. So everything that we add now has to be value accretive. It has to be asset right.
All right, gentlemen, thanks a lot, Ajay, as well as Nitin, for joining in and giving us all those details. We wish you all well for the remainder of the coming fiscal, and just a request, go a little easy on the price hikes. Old timers like me love to visit, the cinema halls and enjoy a movie. All the best. We'll catch up in the coming quarter as well.
Thank you.
All right, well, time to get back to the markets then. The Nifty is actually struggling to hold on to those gains. The Nifty Bank as well now is up only around 50 points. At one point of time, it was up more than 150 points. So at higher levels, we're seeing some bit of nervousness that's creeping in. But let's tell you about the sector of the day. That's the metal index. That's flying away in today's trading session. What's working for it? Well, the street is a little bit optimistic that the Fed will start cutting rates. We also have the inflation data points, so that could give some direction on that front. And normally ahead of big inflation data coming out of the United States, you did see the metal index move up a little bit. But there's some stock-specific action as well that's helping some of these metal names. So let's focus on JSPL first. Came out with a set of numbers overnight, and it looked very good. The EBITDA per ton was better by close to 300 rupees in comparison to what we were working with. And that was because volumes were better as well. Close to around, more than 2 million tons is what they delivered. We were working with a number of around 1.9 million tons also. Some part of the operating leverage will play out, and that's why the absolute EBITDA was better than what we expected. Now, quarter 4 was good, but quarter 1 could be even better. Why? Because price increases have come about. The management has said that coking coal costs will come down by $30 to $40 per ton. They're also talking about using higher amount of their captive coal, which will help them. And finally, earlier they were selling semis. Close to 1.4 million tons of semis is what they sold in FY24. Well, in the coming year, some of those semis will get converted into final steel or value-added steel, and that's where they'll fetch better realization. So put all this together, some part of the street is quite bullish on the stock, namely Nuvama. They have gone ahead, they've increased their target price out there. They've increased their multiple itself. Earlier, they were giving it 6 times EV per EBITDA, now they're giving it 7 times. And they're expecting their EBITDA per ton to go to around 16,700 rupees in FY26, and the ROCE improving to around 21%. So that explains why JSPL is up, it's reacting to numbers. Vedanta. On May 16th, they're going to be having a board meeting and they're going to be looking at raising some equity. It could be an FPO, rights issue, some kind of equity raise is what they're talking about. And also they're saying that they're going to be looking at a dividend payout for the first time in this fiscal. So that's why the street is quite excited on Vedanta. And besides that, they're saying the reserves on the oil and gas division has gone up by 19%. So that explains why Vedanta is up. Hindustan Zinc, that's recovered big time from the low point of the day. We know that zinc prices are firm, silver prices are up, and even lead prices have moved up. But now an additional kicker came in earlier today. They have been announced as they have technically qualified as a bidder for 2 gold mines in Rajasthan, and both those mine names should come up for you on the screen. So maybe a new avenue, this is what they're looking at. So the street likes that. It's still a little bit lower, but it's recovered a goodish bit from the low point. And finally, Hindalco, their subsidiary Novelis is moving in that direction where they're going to be listing on the NYSE. Further details are awaited, but this is the stock-specific action that's playing out. I think ahead of that inflation data, that the street is anticipating that maybe rate cuts could come about and we start moving in that direction, and that could be an additional trigger why the metal index itself is moving up. Let's get a view on the index then. Dipan Mehta joins us, Director at Elixir Equities. Hi Dipan, it's a sector that you've not been very, very fond of, but what's your view? You have the ferrous and non-ferrous names, they're off to the races. Do you like any of these names?
Yeah, good morning, Nacho. Thank you for reminding me at every time about my reference for steel companies. Is just baggage, you may say, because never really made too much money on steel companies because of the volatility in earnings. But yes, you have to hand it that JSPL came out with a very good set of numbers, largely because of lower raw material costs. But if you look at the volume growth, it was flat, completely flat. So that's a bit of a red flag, according to me. And sure, I think steel companies have done well. There is a better price discipline amongst them. Threat from imports has reduced mildly. And street is paying higher and higher P multiples. So I haven't seen P multiples, price to book multiples as high as they have been for the steel sector. But coming back to commodities, I think, look at the way prices of copper, aluminium, and zinc have moved up. And clearly, I think Vedanta is in a very sweet spot because it has got all of these 3 metals within it. And, the entire demerger process which they are trying to do will eventually lead to a lot of deleveraging at the parent level, which has always been a cloud as far as Vedanta is concerned. And it's an aggressive management. They are interested in expanding capacities and right-sizing their business. It's a global business as well. And I think they are seeing a cyclical upswing. So I would say that's one of the top picks within the non-ferrous metal space or the commodity kind of group per se.
Stay on. Dipan, need to get into a break. On the other side, we'll also invite Vikas Khemani, founder at Carnelian Asset Management Advisors. Stay tuned.
Welcome back. Here with us on Closing Bell, and it continues to be a pretty strong afternoon of trade. Let's actually look at some more developments in market stories right now. The general insurance business data for April is out. Let's go across to Yash to understand the trends. Yash, how's it looking?
Well, Surabhi, it's looking like a good month as far as April is concerned for general insurance companies. Three key headlines coming out of the month of April. The first one is that ICICI Lombard has managed to perform really well, and that too on a strong base that it was working on from April 2023. Star Health Insurance this time around has shown strong performance. It has managed to close the premium gap when it's compared with industry average. And third one, New India Assurance has lagged in its performance in the month of April despite having a favorable base. I'll start with ICICI Lombard. The April premium has grown at 23%. Remember, it was working on a decent base of a growth of about 17%. April 2024, year on year, the market share has grown by about 63 basis points for ICICI Lombard. New India Assurance, as I said, weak performance. The company has grown its premium by about 4% in the month of April. It was working on a favorable base of about 10% growth last year, same month. The market share, importantly for New India Assurance, in the month of April on a year-on-year basis has dropped by 200 basis points. So that's a negative for the company. Go Digit Insurance, the IPO opens tomorrow. I've decided to include that in this particular list. April premium growing at 8%. April market share down by 22 basis points. Now, importantly, Star Health Insurance, the company has performed well in the month of April. It was growing at a strong base of 25% growth last year, same month. Despite that, it's managed to grow at 23%. Now, generally, Star would have a gap of about 10% when it comes to standalone health insurance industry average growth. That has reduced to just about 4% in the month of April 2024. Market share amongst all general insurance companies is up about 21 basis points for Star Health. Amongst standalone health insurance companies, it's down by about 116 basis points.
Okay, thank you very much for that. Dipan is still with us on the show. Dipan, Aarti Pharma, it's a very small company, but the stock is up 20% reacting to numbers. Have you looked at it?
Sorry, I'll pass that company. I haven't really looked at the numbers per se. So,
what about the reaction we're seeing on Cochin Shipyard with the European order boost? What have you made of that?
See, I think order book position for shipyards like Cochin is not an issue. It's just execution and how quickly they can deliver and how much of that revenue they can book and what kind of capacity they still have available for new orders. And in a way, I think earning visibility is drawing a lot of investors to the counter. And we are seeing a sharp increase in expansion of the P multiple. Not so much about the earning, but the P multiple really they expanded for a shipbuilder like Cochin Shipyard. And I think if you're looking for a safe kind of investment with good earning visibility for the next several years, then all the shipyards, including Garden Reach, Cochin Shipyard, all of them, I think, have got a great future from that point of view.
All right. Devan, thank you very much for that. Appreciate you joining in and great conversation as always. 140 points on the Nifty is where we are at, 22,240 on the index. Vikas Khemani is with us, founder at Carnelian Asset Management and Advisors. Vikas, welcome back on the program. Thanks very much for your time. Vikas, the market's been sort of, a little jittery, a little skittish, a little nervous, 5.5% kind of pullback from the all-time highs from that Friday's high. But today it's a much better looking screen. What's the dominating driver, Vikas, to your mind right now for the market? I'm talking about here and now to begin, and then we can kind of sort of stretch out the timelines to the more medium term. Go on.
I think, Prashant, in the recent past, there have been a lot of narrative getting built that, BJP might not get decent majority and there might be some compromise on that. And I guess that probably made market nervous. In fact, that, market is expecting or was expecting, continuity of the current government with a decent majority. So probably that those kind of, narrative building could have, led to this kind of correction. But I do believe that, there's a very strong probability, I would say, for current government to come back with 350 plus. And, and if that were to happen, this correction is a good opportunity to kind of bite in or nibble in or increase your exposure. So I'm kind of quite optimistic or, positive about the markets.
Vikas, afternoon. Now, you've been bullish about the manufacturing theme way back in August of 2020. And ever since then, in every interaction, you've only reiterated that, and you believe all the stars are aligned. The question is that even in any upcycle, usually in 1 or 2 years, most of the re-rating takes place. And after that, stocks end up becoming, market performers, or we don't, end up seeing the kind of multi-bagger returns that you see in the first few years. Has that happened with manufacturing and any of the stocks?
So, I mean, as you rightly said, that there will be periods of accelerated return and there's a period going to be periods of stable returns. And we have seen in many sectors in the past as well. IT was one such example, till 2000, and then after that we saw a stable return. But after 2000, also IT has given a great return, post whatever 2001 debacle. So anytime a trend builds, there will be accelerated return and there's a stable return. But mind you, the stable return itself is not bad, right? So I do believe that while manufacturing has made significant return in the last 3-4 years because the early pickings have gone away, but still the growth of the sector is here to stay. To give an idea, today, total manufacturing GDP of India is only $0.6 trillion. This number, by the time Amrit Kal ends, will become $8 trillion, 16 times of the current GDP. If this kind of growth happens, it is very natural that many companies will become 20, 30, 40 times. Many sectors will do much better. So it is our job to identify those companies, segments. So money will be made. There's no doubt on my mind. Of course, same companies may continue to compound, new companies might come. So that's a very different sort of. But I wouldn't say that manufacturing as a theme is kind of over, or it's a long legs. And also I will tell you, within the long journey also there will be periods of correction. Like till 2021 or early 22, chemicals was doing very well. And then we saw entire 22, later part of 22 and 23, chemicals kind of correcting. But now again, we're beginning to pick up. So, all those things, intermittent cycles will come about. But if I take a longer term picture, I think it's going to create one of the very large wealth for Indian investors.
All right. Hi, Vikas. Good afternoon. Nigel on this side. First of all, I really enjoyed the chat that you had with regard to the risk that you take in life as well as in markets and how things pay off. If you try only then, you can enjoy the benefits as well. So good on you. And good to see that it's been quite successful for you as well. But talking about the markets, I wanted to understand how do you approach the pharma theme as well? At the start of this year, actually, you were in minority because you said the pharma index, it's going through, I think, 6-7 years of a cycle where it didn't move at all. But year to date, at least, it's been the big outperformer. The Nifty, I think, is up 2%. The pharma index is up close to 13%. Your view on this theme?
I think, Nigel, I continue to believe that pharma is a very big theme from here as well. I continue to believe that pharma is a big theme from here over next 5-6 years. You will see, because for a good 6-7 years, sector didn't do at all very well. US markets were in a difficult time. I think US pricing has improved. Domestic markets are growing with the government's focus on providing healthcare to all. With the Arogya Bharat, the consumption of the medicine has gone up. So, and also with the China Plus One playing out, you have APIs coming about, CDMO coming about. So the sector is evolving, sector is becoming bigger. So I think, it is here to stay, and it is here to stay for a very long period of time. So I continue to remain very positive on the theme right from the time when we spoke about, late last year or earlier this year. But I think it's a long journey.
Because one of the names you like in that space is Loris. It's, there is potential, and it's just that when is it going to emerge and burst out, right? Because quarterly disappointments have become kind of routine, but things change, and, you're betting on that change. How close are we to that turn, in your opinion?
Again, I will tell you, Prashant, this is CDMO, the sector, the segment you have to understand. It's a very, very a tricky segment. You need to make investments ahead of the demand, and once you need to showcase the capability, you need to showcase that you have a capacity, and then customers come audit, they work programs together. So it is always very okay to have 2-3 quarters of here and there in terms of from time you start to kind of deliver. So I think the company has good party that is transitioning or has transitioned from pure API plays to CDMO plays, and so this kind of transition, by the way, is not easy. And at least what's it speaks volumes about the capability of the management and credibility of the management in the eyes of customers, that company can transition from a so-called commoditized, ARV API business to a CDMO player. But this transition sometimes takes longer than market expect. Markets, we are very impatient people. We all want quick results, but that's where I think your patience gets tested out. I would say look at Newland. Same thing had happened in the Newlands case. Market, hypothesized they will deliver, and then there was a disappointment of 2 quarters. Stock went down to $1,000. Today we are sitting at 6,000-7,000 rupees, right? So 1 or 2 quarters of good number, good few contracts coming can change the fortune of the country of the company. So I think what I believe is that CDMO is a very big space. There are only very few players who are well positioned in this segment. So I think it's but again, I mean, my horizons are 3 to 5 years, so I'm happy to put up with no performance for a very long period of time.
Okay, finally, hi, good afternoon, Vikas, to be here. So, just wanted to end with your thoughts on some of the new age businesses, and some of them have come out of age. I mean, we're now seeing profits not even at the EBITDA level, at the net level as well. I mean, Zomato being a case in point. But I just want to understand your thought process around these some of these businesses now. Because, for instance, what this quarter has taught us is that a company like Zomato, while profitability is improving, business metrics are improving, there's an outstanding issue with respect to ESOP costs, and the market has a problem with that. It's very evident. So, how are you evaluating the new age or not so new age businesses now, which are largely technology-led, technology turbocharged?
I mean, there's no doubt that these platform plays are, is a different segment. One has to look at that. But at the same time, you have to know, in my opinion, how does one look at the valuation? And as you rightly said, that while they have turned around and they have become a bit of profitable, but then in the profitability also there are different pockets to pick for. For example, like employee cost, right, or ESOP cost. So I would say that so far we haven't kind of invested into anything of new age. We've been kind of still circumspect about, and I don't know at this market cap of 2 lakh crore approximately where Zomato will make money and how does it look at valuation. So we the way we think is that you should invest into money companies where you understand the business model, you understand the dynamics of the business, and you know how you will make money. We do not believe in doing a little bit of pie in the sky, hope trades. And somehow most of these companies to me appears that way. And I'm not saying that they're not good companies. I'm not saying that, I just feel that we have no ability to assess the risk reward of these players. What are the risk ONDC offers to these players? We have no idea. So hence, when we invest from 5-10 years perspective, you might do a trade, but when you look at 5-10 years perspective, you got to be worried about many of these things. And currently, I can tell you, we don't have any.
Vikas, thank you very much for joining in. Have a great afternoon and evening. For those who missed out on the news, Zomato's ESOP cost doubled in the current quarter to 161 crore. And not just that, the company is also asking for a shareholder approval for further ESOP grant of 18.2 crore shares, which at current market value is close to about 3,500 crore rupees. So that's weighing on Zomato today. The stock is down 4.5%. But getting you a CNBC-TV18 exclusive now, we learned from sources that Mankind Pharma is looking to acquire Bharat Serum and Vaccines. Rachna is here with the details. Rachna.
That's right. Sources with direct knowledge of the matter have told CNBC-TV18 that Mankind Pharma is considering acquisition of Bharat Serum and Vaccines from private equity firm Advent International. Now, Advent International owns 100% stake in Bharat Serum and Vaccines and is now looking to sell after almost 5 years of acquiring it. It was in 2019 when Advent International first acquired a controlling stake of 74% for about $500 million in the company by giving exits to private equity players like OrbiMed Asia and Kodak Private Equity. It further acquired promoter family stake in 2020 for an undisclosed amount and is now looking to sell for a valuation of about $2 billion. And it's not just Mankind Pharma that is considering this purchase, it is also Swedish private equity EQT Partners. Now, we wrote to Mankind Pharma, but we did not receive a response from them yet.
All right, got that. Thank you very much for that story. Mankind Pharma still holding on to gains, about 3.5% on the upside.
Surabhi. Yeah. Mankind reports numbers tomorrow, so we'll probably get a chance to ask them about this.
Absolutely.
Whether they're in the fray to acquire this company. But I think we'll take a quick commercial break here. We'll come back. We'll get you a quick check on what's happening in dealing rooms and short-term trading ideas as well. We're up 116 points, so about 40 points off the day's highest level. Stay with us.
Welcome back. Well, it's green on the screen. All the frontline indices holding well in the green. And the good news today is the advanced decline ratio is still in favor of the number of stocks advancing. 3 stocks advancing for every 1 stock that's declining. So your portfolios will be feeling good. Nimesh is with us. It's 3 p.m. Nimesh, what are you picking up on in terms of D-Street chatter?
Well, in a sharp recovery for the second day running, right? So that's a good part. And as you rightly pointed out, today a lot of broader market stocks are doing well. So at portfolio level, there is a bit of, feel-good factor, so to speak, for a lot of investors as well. But I guess, we've been saying this for a while now that 21,800 is a very crucial support to watch out for. And I guess the way the markets have bounced back from those levels looks like, at least for the time being, that will be a very strong support on the Nifty on the downside. So with that support, maybe you can, markets can see that momentum to continue. I guess from a Nifty perspective, maybe after this 2 days of up move, it may just spill over to the broader market stocks now. And what I'm saying is because even from a flow perspective, I understand there are limit buy orders in a lot of mid-cap names today. And probably that explains that mid-cap index is up nearly 1%. In terms of sectors, metals is the biggest outperformer today. The index is up 2%. But I guess apart from metals, even select PSUs have seen a bit of a bounce back after the recent sell-off. So I guess it's also to do with the kind of numbers which have been talked about as far as the election data is concerned. So that's going to add to the volatility is what I understand. But broadly from a flow perspective, at least it seems like the buying interest is back in select PSU names as well as in the broader market stocks.
Well, indeed, it's a bit of a feel-good factor as well today. There is belief out there that we're going to have continuity. So hopefully the market gets its verdict in its favor. But what about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock on my list is Timken. A big move in that stock. The stock is up 6%. There's a large block in today's trade. I understand it was a clean-out trade from a domestic mutual fund. That fund has sold out. So maybe that explains a bit of move in that stock in today's name. The second stock is Indiabull Real Estate. For the second day running, there is delivery-based selling happening in that stock. In fact, the stock has relatively underperformed. This month, the stock is down 9%. And while the preferential money is still to be paid, some bit of selling has led to a bit of underperformance in Indiabull Real Estate of late. The third stock is Federal Bank. Again, the stock has been consolidating of late. Post numbers, you've seen a bit of a sideways move. But now I understand the selling pressure from a leading domestic mutual fund is largely over. So maybe, now from here on, you'll see some bit of outperformance in that stock as well. And the last stock is Tata Steel. Well, the entire metal stock has done well. Indeed, Tata Steel as well is up 1%. But I understand there are very strong sell flows at a leading FI desk in Tata Steel in today's market. So expect high delivery volumes in Tata Steel today.
All right, Nimesh, thanks very much for that interesting list of stocks as always. And we'll track that as we go along. Mitesh is with us to tell you what to buy or sell today for a reverse trade. Mitesh, still got 100 points, but the market was higher still. What are the trades now? Sorry, and I think we didn't get back to you for your trades for 2:30. Go on, Mitesh.
So I think overall reality is closing at near the day's high. I think good sideways consolidation could break on the upside. So we'll take a BTST here. Keep a stop below 1500 and look for a target of 1540, 45. But I suspect we can eventually look at higher levels in case the market doesn't start trading below 22,200 tomorrow early in the morning. And the other one which I like is RBL Bank, which I would suggest a BTST with a stop below 247 for targets of 254.
Okay, thank you very much for that. Now let's go on and talk about Devyani International. That's the owner of brands KFC and Pizza Hut. They reported the Q4 numbers. Mangalam joins in. Mangalam.
Well, if you look at the intraday chart of Devyani, immediately as the numbers hit the screen, the stock saw a big decline. Thereafter, has seen a bit of a recovery and is stable ever since. So you have to look at the numbers in a lot more detail than just what's been reported. So revenue for Devyani increased by about 38%, 1,047 crores on the top line. The EBITDA increased by about 14.5%. There was some compression in the margins. At the same time, the profit, in fact, the company reported a 61 crore profit same time last year, and now that's turned into a loss. Why is it that the revenues grew 39%? Well, because the company had acquired KFC Thailand, the operations of that in partnership with Temasek, and as a result of which the revenues were expected to rise by around 35 to 40% for that acquired entity, and that's aided in their numbers. Why are the EBITDA and the net profit, or EBITDA margins and the net profit, lower? Well, because there was an exceptional expense of 42.5 crores on account of the Nigerian currency devaluation. Secondly, the employee expenses have increased, one because of the consolidation of KFC Thailand, and secondly, ESOPs of around 1.787 lakh shares have gotten exercised as well. And thirdly, because they acquired KFC Thailand and added new stores as well, depreciation has increased from 78 crore to 125 crores. Depreciation, of course, is a non-cash expense. But the India internals don't, give you a lot of hope, because KFC India saw an SSSG decline of 7%. Pizza Hut India also saw a decline of 14% on a same-store sales growth basis. Costa India and Vango are the only two properties that are doing well for them, of course, on a very small base. And these are places which the company is seeding growth as well. Costa India, of course, they've added 25 stores. Vango, which serves South Indian food, has seen a store addition of almost 9. We've seen 6 KFC India store additions and Pizza Hut India at around 2 itself. These numbers not particularly enthusing, but the fact is that the stock has corrected from the top given the weakness that we've seen in the QSR space, and as a result of which no big change is what we're seeing in the stock price, but we need to see some improvement in sentiment when it comes to QSR.
Thank you very much for that. We will slip into a very short break on that note. We'll come back and we'll invite Jay Bala of cashthechaos.com. Stay tuned.
Welcome back. Well, the markets continue to hold well in the grain. The Nifty Bank, that's seeing a bit of an uptick. I think maybe just pull up the Nifty Financial Services Index, because that's the one that's been moving up in the last few minutes. Just keep an eye out on the Nifty Financial Services Index. Jay Bala joins us to help us out with some analysis. Hi, Jay. Good afternoon and good to see you in. Well, it's a stock-specific market, so I'd like to know your stocks first that you're tracking for today.
Yeah, I have 2 longs actually, Nigel. The first one is railway stock, Telecom. I have a stop loss of about 213 for a price objective of fresh record highs close to 290. And the second is a short-term, very short-term trade on Wipro. Stop loss of 436 for a short-term price objective of 475.
Hi, Jay. Good afternoon. Great to have you on, on the show today, as always. So we were just discussing this a while back, that the PSU rally has come back with a vengeance, right? I mean, just a couple of days of lull, and now they're all roaring, especially today. I mean, railway, shipyards, across the board move. What do you make of this, and would you look at any long trades on any PSU stocks now?
Yeah, I think it's more limited to the railway names rather than a broad spectrum of PSUs. Some of the PSUs, like Bank of Baroda, have been negative since last week. So a little bit of caution is required. This is probably completing the structure that's pending for railway names like Rail, Telecom. They need to go above the 2024 high that was clocked in early January. So it's just possibly selective pockets within the PSU names that's trying to push to fresh 52-week highs. So I wouldn't get too upbeat on the PSU names.
Jay, what about L&T and Reliance Industries? These are the two pillars on which the market is rallying today.
You got a sharp eye, Rima. Basically, I was trying to, I was going to raise a point on nifty infrastructure names. L&T in particular has had a significant reversal and probably clocked an important top from the 2020 bottom. But it's just still remains to be seen. We'll watch the resistance at about 3,500 for L&T, and if we get a strong rejection from there, then it confirms that it's clocked a significant medium-term top. When it comes to Reliance, it's a very interesting juncture. For the bulls, the recent low about 2770, that needs to hold. If it can hold, I think it has the potential to clock one last high. But for the first time, it's clocked lower lows and lower highs. So it's an important juncture. But these two names are housed in the Nifty infrastructure. The Nifty infrastructure index is looking like it's starting to turn. But we need to see a close below 8,000 level on the Nifty infra. Only then it will confirm the whole infra play is turning. Because most of these names are economy facing for India. So a close below 8,000 is going to have a significant bearing for the medium term for most of the names. And it's since, as I said earlier, these are all economy facing names. It has an impact on the overall market structure.
Jay, sorry I missed it, but did you discuss metals yet?
Oh, no, not yet.
I mean, Vedanta, Nalco, and everything there in that space today. JSPL, some of this, of course, is results reaction. Vedanta is also, there's a board meet coming up for fundraise. I mean, so there are individual stories, but I'm not sure if there is a sectoral tailwind. Any thoughts here?
No, actually, there is a sectoral tailwind. From about 7,500 on the Nifty Metals Index, the Nifty Metals Index needs to complete a structure at about 9,600, 9,800. So this is probably at the fag end of the move. So and if you look at COMEX Copper, I believe it's got a couple of days of higher highs to clock, and it looks like it might run into an exhaustion there. So we're watching significant resistance in both these in the metals index as well as COMEX Copper. But I've mentioned the resistance levels here. The momentum is clearly on a drag, and so it's clearly signaling that metal names are on a stretch, and they could very soon exhaust. But no preempting the markets. We'll be watching for what the price actions tells around these resistance levels.
Okay, got it. By the way, I mean, there's a bit of an Adani Group move that has built up in the last two trading sessions, and all of the stocks are up today. Adani Enterprises, of course, are 5.5% higher. Ports is up about 2%. Adani Power is up about 5%. Adani Energy Solutions, 3.5%. The entire lot, Total Gas, is up about 5.5%. Now, so far in the last two trading sessions, the best move is on Adani Enterprises, closely followed by Ports. So that's what's playing out. Jay, you notice anything interesting on the charts here? Even a short-term trade? Anything that you would take?
Yeah, actually, besides the two picks, I was actually tossing in my mind whether to pick Adani Ports as a pick. So I know because the risk rewards from here is about a little over 1:1. So a 1240 stop and for a 1460 objective, 1480 objective, that didn't look so great. But and it's a big name, and some people perceive this as politically close to the present government. So that's the reason why I avoided it. But yeah, it is looking very short-term interesting for the high-risk taker. There is, but it looks to me that the move from the February low of this year is looking like an ending move for Adani Ports. So that's another reason why I just put it as a third on my list rather than top two.
Okay, one stock you should keep on your radar today is Bharti Airtel. Numbers are expected closer to about 345, so soon after markets close. And today, all the telecom stocks are higher. Vodafone Idea is up 5.5%. Indus Stars has gained close to about 3.5%. But Bharti Airtel is trading absolutely flat, so not participating in the broader telecom rally that we're seeing. That said, the stock is done pretty well. Year to date, it's up 25%. In the last 1 year, it's gained close to about 62% and is very close to its all-time high levels. The driver behind the telecom rally is the expectation that we will see tariff increases once the election is over. The last tariff increase was in 2.5 years back, and now the Vodafone Idea is capitalized, and if it has to be a long-term competitive player, we will need to see some tariff hikes. Onto the numbers. Well, the fear is this time that Bharti's consolidated numbers will be lower than what the street is expecting. The key reason for that is Airtel Africa reported numbers last week, and Airtel Africa accounts for about 25% of the overall P&L. And Airtel Africa's numbers were lower than street expectations. Revenues fell, the EBITDA fell, and that's because of the devaluation of the Nigerian currency. So the Airtel Africa performance could weigh on the consensus numbers, and therefore it could be lower than what the poll throws up. But the street might focus on the India business, and the India business is likely to report a steady quarter like we've seen in the case of Reliance Jio. The two metrics to track, one is the ARPU, average revenue per user. Now for Bharti Airtel, despite no price increase, the ARPU has been steadily inching up, and that's because of premiumization, basically converting the 2G subscribers into 4G or the existing 4G subscribers into higher value plan. And the second metric to track will be subscriber growth. How many subscribers do they add on a quarter-on-quarter basis? And here the number is seen closer to $4 million, maybe between $3.5 to $4 million. So that's Bharti's expectation. As I said, numbers should be out in the next 15 minutes. So, Jay, what about Vodafone Idea? Have we seen a base built into the stock closer to the price at which the companies raise money? And Indus Stars, that's been on a tear, and Bharti Airtel. We've not spoken about telecom often, but where do you stand on these stocks?
Yeah, for me, Vodafone Idea is an avoid. I've been bullish on Bharti since I know it's a sub 1,000, and it's performing quite well. And I expected it to exhaust around 1360 odd levels, but it's still, it seems the momentum is still intact. Probably one more high due. But Vodafone Idea, as long as it stays below 14.5 and 14, it's a complete avoid. There could be short-term upsides, but I don't like the price structure. That's why I'm avoiding the stock.
This is the article today, Rima, in the morning that get ready to pay 25% higher tariff. That story, I think it was the Times of India. But the stocks actually corrected, come off quite sharply, 10% or so, along with the market fall, and it's recovering some of it with the gain today. I think we're going to wrap up things here. Jay, great speaking with you as always. Appreciate your time, and talk to you soon again. We'll end 115 points higher, 22,218. The high today was 22,270. So exactly 50 points off the day's highest level. Guess what? The 40-day level that we have been discussing from the morning is 22,272. So we almost got to it, and then we saw about a 50-odd point kind of a reversal. But still, it's a good close. Nifty Bank did a little less, but ended higher, 47,862 on the Nifty Bank. Very big PSU day, long list of gainers there, and metals as the standout performer, sectorally speaking. Rima.
Well, talking about the individual movers in the frontline pack, Adani Enterprises, the top gainer. Autos did well, M&M, Hero MotoCorp. L&T, Reliance Industries were the star performers in the large cap heavyweights. On the way down, consumption names, so Tata Consumer, Nestle subdued, Axis Bank, ICICI Bank on the back foot, and Cipla gave up yesterday's gains.
Well, it was PSU, and PSU all the way. On the Nifty and beyond the Nifty as well. Look at some of the moves. Mazgaon Dock, 10% higher. Then you've got a lot of, then there's Cochin Shipyard, I must mention here as well, about 12% higher. Look at names like, NBCC, 5%, and the entire railway rally was scorching. Aircon about 8%, RVNL, Railtel. These are stocks pushing almost 10% gains intraday today. Big moves really coming in there. The Adani rally, we were discussing it just a while back. So Adani Power, Adani Total Gas, gains here are in excess of 5% on many of these stocks. And then, of course, even beyond, it was just PSUs all the way. Hoodco, quite a few other names as well, which really stood out. So strong, solid day coming in. Beyond PSUs, Godfrey Phillips deserves a mention, 9% move, pretty strong one at that. And in terms of news-based movers and shakers, Ethos on good numbers, 5.5% on the upside. So that's how the day has played out. Strong day and a good session for the market overall, specifically for mid-caps. Well, with that, it's a wrap on this edition of Closing Bell. Many thanks for watching, but don't go anywhere. Stay tuned. Our special offering, Markets Forward, comes up next.